the S&P 500, and everything's pretty much going on track actually. So we were looking at wave 2 coming in around this area through here. We've got that, and we're starting to develop an impulse wave to the downside of 5-wave structures, so we should be seeing more. The wave 3, when it comes down, should be longer than the wave 1 here, plus 60%. But of course we always gravitate towards the closest, largest numbers. One of the important things here though is the medium level here, 1650, is becoming the retested resistance. So just drilling in on that a little bit. You see it a bit more clearly here on the 2-hour chart, but we'll just go in a bit further. On the 15-minute chart, there's probably a couple of ways to count this to the downside, but whichever way you count it, it's still impulsive to the downside. And secondly, that the 1650s, you can see, is becoming the retested resistance. The other important little subtle aspect is that this little move up through here is becoming an ABC correction, because as this comes down here further, it overlaps this one here, therefore making this corrective, and at some point then we'll make new lows here. The tricky bit is, as per usual, this ABC here may only be the wave A, and we could get a wave B here, and then a wave C up to this area through here, looking for a 61.8 retracement level to the 50, 60 up through here. So that's quite a that's quite a possibility. So we may see this before we see this here. So it really does add a different perspective, because it would make Friday and Monday the sort of bullish days. This move down through here, if this is an ABC through here, then we can look at this move through here as a 61.8% pullback as well from this low little area through here. So the 1645 would be the 61.8 retracement level here. So I was thinking that perhaps we could use that 1645 here, such as a bit of a line in the sand. It is a bit of a balanced line for these here, in terms that, it was support here and it was the resistance here. Well, close enough. You can see this is spiked down, found support, moved back up, come down, checked it there and came back up. It wasn't strong enough. So I guess this time, if the 1645 does become the retested resistance, then you could use that as well. And obviously the 1640, is a bit of a no-brainer there. But yeah, just to be a little bit mindful, there will also be a bounce off. We've got this trend line coming through here on this low through here, and it seems to be still intact as well. So we need to be mindful of that situation there as well. But definitely the counter trend that we had here is corrective. So new low under wave 1 here would be the go, and we're looking at this being down for 1 and back for 2 to here, or possibly to here and then further down through here. So I know that's a little bit tricky, but if you undertrade to a point that it all becomes slightly meaningless, and having orders in this range through here, then once the market moves down here, you've actually built a trade from that point. Because when you think about it, we're still looking at lower grounds here in terms of just going back to the 4-hour chart, down for 1, back for 2, then down for 3, which would be further down through let's just, you can use the extension there, but it would be something like that. So we can go to the 1600 for wave 3, then wave 4, then wave 5. So that brings us down to the, say, 15, into this area through here and into the 1550. That's what we'd be looking at. So it becomes kind of meaningless, having a few orders put in here. It's just a matter of acknowledging the amount of risk one takes in the beginning of it all. The US 30 is the same as well. The US 30 had quite a high retracement level up through here as wave 2. So, you start to doubt yourself at that point there. But we did the right thing. We stuck with the S&P 500 as being the main broader sort of indicator, I guess. Yeah, look, once again as well, the move down from wave 2 high here down through to here can be viewed as wave 1, and wave 2 would come back as a retest into 15 400 there. I was thinking here on a more subtle note here that, I mean, there's also a possibility that this move down here is just the wave 3, the wave 4 here, and the wave 5 to here, then a bounce from that point there. But I was thinking that on the Dow here, there's a level in here that, well, this is obviously important as well, but this in here at the this number here, the 15272. Now that's going to carry a bit of weight, so that as resistance would be one reasonable place as a short-term trade setup there. So just bear that in mind. In the bigger picture, we're dealing with the minor group 1, which is 100, 200 and 300. And normally if we find the 200 here as retested resistance, then we can look at the closest largest number, which would be the medium level 15,000. So that too is important there. As things go with the trading levels, the 15,300 as support is a bullish scenario. So we just got to bear that in mind, but the bias is obviously bearish at this stage. Alrighty, the European markets are same. So the UK market here on the 4-hour chart here, we can look at this as the 5 waves down here for wave 1 here as such, and wave 2 came reasonably high as well, didn't, more than the 61.8 retracement level. And as you can see down through here, it's moving down quite quickly. So it's got the personality of a third wave and not a C wave. A C wave would be on more of an angle here. So this is coming down rather sharp. In this one here, you can see that this is the third wave in here. So the wave 1 and 2 would be in here. So if we just drill into that for a moment, so this would be the wave 1 and wave 2, and this is the third wave coming in through here. Well, it does count. This is why I was kind of curious with the Dow as well, and the S&P 500. They can also be third waves and fourth waves pulling back, and not pulling back to the 61.8, but the 40% rather than 60%. So yeah, so in this case here, this would be the 1, the 2, the little third wave in here, not so small. The fourth would be in here, and the fifth would be here. The fifth wave would be the same size as wave 1 here, because the extension's in wave 3 here. So this certainly can be a wave 4, which would pull back to this area here, to the fourth wave of 1 lesser degree. So this is obviously in sort of an A, B, C here. There could be more to come here, that's all I'm saying from here. But the target area for this down would be the 6,500 down through here. So, I think realistically we could expect a bit more, movement in here as a wave 4, but then hitting wave 5 here as such. Let me just have a look. What have I? 1, 2, 3, 4, 5. Yeah. So from if this is the case, then the 1, the 2, the 3, the 4 would be done and dusted, with the wave 4 here, the wave 5 here to complete wave 1 there, and then the bounce. So the bounce would be coming off this area here back to supply area, and then a move down from here, so down to the 65. So but anyway, all bearish. The Australian market is the same but different. We've been in a bit of a different wave structure, as you can see here, and the wave 5 that we're coming into now should create a new low under the wave 3 here. We are working through a wave 4 here, and as you know, wave 4s can get a little bit tricky, so that means that they can be a bit time consuming and so forth. But looking at this here so far, it does appear that it's spent enough time here. So if we just drill into that for a second, this is definitely corrective here because it's got overlapping wave structures. So it's a bearish corrective rally, and new lows will be made. It's just a matter of when. It obviously can get larger, but I was looking at this little structure down through here, and it does seem to be an impulse wave lower here. So the 1, the 2, the 3, the 4, and the 5 here. So we're looking at some sort of ABC correction for wave 2, and then down for wave 3 here. So that's something that that you could that you can consider somewhat through here. So I guess in looking at this here, I was thinking in terms of the short trade setup, is the 49.50 here becoming the retested resistance would be a place to work with. It will also be a bit of a rough ride coming down through here, but if this count is correct, then we would be looking at wave 1, 2, 3, 4, and then 5 into here would be looking something like that there. And if the US is going to pick up speed in the third wave to the downside, then this can extend to the downside as well and would be looking closer to 4.8 at that point there. But obviously we need to expect to be able to work through the 4900 here. And when working through the 4900 here, we need to take into consideration the levels of one lesser degree, and that would be from the 49 here, the group 1 here, and the group 2 here as support. So the resistance will eventually build into group 1, and the support will start with support, and then the support will become resistance, and then you'd move down from that point with the, anyway, the range is here, the balance line is the 4900. Let's have a look at metals and resources. Okay, commodities, starting with oil through here, and as you can see that it's on track in our wave for this particular wave count further to the downside. Obviously there will be support at the old lows at 92. However, the wave structure to the downside from B to C is still unfolding. The sharp move from 95 to 93 is the third wave, so there's still the fourth and the fifth wave to move lower, which should take us a bit below the 92. Obviously, it could extend down to 90 if the US indices, really stretch out into wave 3, because oil follows stock quite often. So that would be the catalyst for that through here. So just drilling down into that here, if we take this as wave 1 and wave 2 here, then wave 3 here is still unfolding through here. So we've got, this is all of wave 3 here, so we've got the 1, the 2, the third wave, the fourth and the fifth coming in through here. So there'll be some sort of support in here, and a wave 4, and then wave 5 to move down. Wave 5 to move down would be pretty much the same as this one through here. So we've got roughly this sort of situation through here if we allow a 38.2 retracement level from the wave 3 here. But still wave 3 looks a little bit short here as well yet. So we could get a bit more of an extension down first, but anyway, lower ground to be had here. The copper market too is turned another layer sort of to the bearish side. As you know, we've just been, plodding through this. We recognise that we had 5 waves here, so then we looked at having an A and a B and a C wave, which has come in quite nicely, and now we're seeing this move to the downside. Now, the important thing here, of course, is that this 330, top of group 1, minor group 1, was support, and now it's becoming the resistance, isn't it? So this is the short trade setup, but it's not necessarily have to be taken, from, trading copper as such, but it does put a bearish note on the materials resource sector as such. So in due course, all going according to plan, we should see a break of this low through here, which would be it's a bearish trigger anyway, so having that point there. So a very safe way to trade, taking out the previous low, or if you're going along the previous high. So yeah, anyway, let's watch that if it unfolds down through here. If that's going to be the case, then we're going to see, we're going to see BHP. Where is BHP? Okay, here's BHP here. Just keeping a track on this one here. As just also wanted to point out as well, this particular 5-wave structure here for BHP is really standing by itself. We're not seeing that in Rio. We're seeing a 3-wave structure for Rio. US BHP, we're not seeing this either as such. So just let me find the BHP here. Overnight, BHP was down a bit through here. So you can see that this is more of a 3-wave structure here for BHP, not not a 5-wave structure. So still possible for the ABC correction through here. Let's see sort of how we go with that. While the 65 is the support, we can look at that here. The B wave normally pulls back 60 odd % of the A wave, and it will also be in 3 waves as well. So it's all going according to a plan for an A and a B and a C rally back up into the 72 for US BHP, which would be the same sort of thing here for the Australian BHP, but instead of having 3 waves here, we've got 5 waves here. Having 5 waves here will give us another 5 over here. As I mentioned before, we don't know how the corrective process is going to unfold, but what we would be looking for would be an A wave, a B wave, and a C wave through to here on the 33, reasonable support, and then up from that point there. So this has taken 3 days to get for the A wave here. The B wave has happened pretty quickly. Let's see if we get 3 waves for 3 days for the B wave here, and if that's the case, we can go along from that point there. The US banks are still, just while we're here in this particular template, because I've got different templates for indices, commodities, stocks, I need to reload them, but I like to keep some other charts within these templates, in each template. So the JP Morgan's here. As you know, we've been working through all of this corrective pattern through here and then through the impulse wave, and there's still more of this wave structure to unfold. There's the beginning, there's the middle, and there's the end. And, we are 2/3 the way through it here, and we will see corrective activity across the 53 here, more so to come. But that said, we're still looking for further upside here, and you can see that these trends in the banks here are strong. They just lead the way, that's all. I mean, our banks are going through a different scenario, and we can just have a quick look at that in terms of any bank will do. CBA is always a leading bank to look at. We had a look at ANZ before. I'm just going to squash this up a little bit through here. Clean this up a little bit here. I mean, what we're looking at here is a little bit different scenario. We're looking at an ABC correction through here. That's basically what we're looking at. So at some point here, we'll be looking at it's making come down low or whatever, but we'll be looking at some sort of corrective pattern and then another 5. So, and this will be with most banks. So we've still got a long way to go. We're different from the US banks as such here. What the catalyst for this is I'm not sure. Maybe it's the tighter money to be found and so forth. Anyway, that's another story. But I just specialise in patterns, and this is the pattern that we've been looking at, and still got further to go. So that's the banks. That's also the indices as well for the Australian XJO as well. Same scenario. So as you know, looking at the XJO, we've been looking at a 5-wave structure moving down through here, and that's not complete yet, because in the indices we're traveling through wave 4, so we're looking at wave 5 coming down through to here somewhere. So anyway, that's that. You understand that? That's good. The gold market, I have to say, it even though we've got a bearish bias on it, while it's about, in my view, I know that the 1400 is the closest largest number in the market. Under that, well, we treat it as bearish. Well, what it does do, in a bit of a nutshell, it stops us going long. That prevents us going long. If we had support there, then we'll go long. At the same time, I can see that we got good support from Group 2, be it 72 or 80 here, and that kind of gives me a sort of a positive bias. So we can't short it either. So it's a rock and a hard place, really. So we've just got to continue to allow it to unfold. The silver one has got a bit more of a positive structure to it, because I was just looking from here. This is a 2-hour chart, but if you pulled silver apart and looked at it, on a sort of 30-minute chart or 5 or 15 or whatever, but you'd see a nice clean 5-wave structure to the upside here. Okay, and then if we took that as even as a corrective wave A or an impulsive wave 1, either will do. Though then this would be a nice A wave, a B wave here, and then a C wave here. So basically we've got a 5-wave structure, then an A and a B and a C here, and it's got that nice sideways sort of movement through there. Yes, it can fail right here and move straight down, but I was thinking that if support is found on 2250 and it retested support, so it has to move up and then come back down and sit on it and then make a new high. So the setup would be the Dow theory setup so we'd see a move up, and we'd see a move down. So I'm just accentuating this because it may not move that high. And then we would have the setup, or you would have the setup of taking that high out when that was triggered. So then if that moved up through there and triggered that, then that would create your long, and your stop would go under the level there. So 2246 is a nice number. 2247 is okay. You get better results with 6 rather than 7 on the long side. Yeah, anyway, that's that. Let's have a look at FX. Okay, a slight change in the US dollar as it's moved back lower through here. So just rework the wave count a little bit. One of the things here is the 83 level, and I can see that it's never really been tested again properly, and obviously this looks like the time that it's going to do it. I was expecting this to move up through here, but those expectations were short-lived as we never created a new high here. So what I've done here is we've still got this as the top of the third wave here. We've got this as the A, the B and the C here for wave 4, and then wave 5 up here because it did make a new high up here, and that length there is probably a little bit shorter than this one here, but it's similar. And then looking at this is the A, the B and the C here, and this C wave here would be in 5 waves, and that would be, if we just have a look on the on a smaller scale just through here, this is this C wave coming down through here in terms of the 1, the 2, the 3, the wave 4 moving through here as ABC is wave 4 here. Wave 4 can get a bit complicated, so it could travel a bit more sideways, and then down through to here. I mean, the length of wave 1 here would be pretty much the length of the wave 5 as well. It'll just depend on where this wave 4 finishes, but at this stage here, the A, the B, and the C here can sort of nail that. But I also have to say too that there doesn't look. I know it looks a bit of a mess, but it doesn't look like a C wave to me. It looks like another corrective process. So this can certainly be a larger correction unfolding through here. Now, the other side of the coin too, if I just go back for a moment, that said and done, this situation here, we could continue to have the same wave count because this move down through here so far is in 3 waves. So what could transpire is that this B wave here, if I just move that a little second here, is we could still be on track as such. So if I just put that as wave 1 here, and this is wave 2 here, pulling back because it hasn't made a new low yet. So that's a real possibility as well. I don't think that's the case because when we look at the German bond market, that's still going to the downside, and while that's moving lower down towards the 142 area, that means that we can't short the euro at that stage. If we can't short the euro, that means that the US dollar is not going to be going up as well. So, and looking at the US, the euro through here, we've been working this as a bit of a triangle pattern, as you know, but at the end of the day, while it's under the 130, we can play around with this corrective pattern through here. But if the 130 becomes the support, then we have to be long from that point. So we don't have a short trade set up in here just yet. But we can't go long either. That's the same as gold as well. If we drill in the same scenario really. If we yesterday we were looking at this this pattern moving across here, the A, the B, the C, we're looking for the D to come down and the E to come back up through here. It bothers me about the E wave though, because it's not really in this move up here, it's not in three waves, it's more like an impulse wave, so it could certainly sort of move higher from here, and I sort of expect it to move higher from there. If I drill in here a little bit further through here, just the reason I thought it would move higher for is because of this three-wave corrective price action through here. So while it's above the 129.30, you can go long on that, but be safer to find the balance point within this particular corrective process, which would be pretty much there. So that would be the 129.40 through there. So support on the 129.40 would flip the balance line of this area here to the upside, and then you would look to go long on the 129.50 there. This would be uncorrelated to the US indices though. So need to be a little bit mindful of that. It's best if they're correlated. But as I mentioned, the German bond market is still going to the downside. So we have to look at this going to the upside. It's as simple as that. So we expect another retest to the 130 area through here, and this being a bit of a fourth wave here. Well, this is the third wave here, so we could look at this being up for one and back for two, and then up for one, back for two, up for three, back for four, and then up for five here. Whichever way you look at it, this move up through here, the trends are getting bigger, the corrections are obviously getting bigger as well. So it's growing. It's like a tree. It's expanding to the upside. So you need to be mindful of that. So if you're going to trade this, then look for support on the 129.40. Keep it small, and if the 129.50 becomes the support, then you go long from that point there. If the 129.20 becomes the retested resistance, then it's trapped in group 1, and then you'll see it back at 129 here. So that would be the side for that. So it's just trading the levels, trading the numbers. The Australian dollar, still on track. We just had an extended little B wave here, so we're still on track with the wave 4 in terms of the A wave to here, and then an A and a B and a C for the B wave here, and then the C wave moving up through here, rechecking into 97 again. So just drilling into that, it's got the same pattern as the euro here as well. So support on the 96.30 is positive. So we'd see further upside from that point there, taking out that high there. But also we've got to be a little bit mindful as well, because even though we've got this labelled here as an A and a B and a C down through to here for the B, is that this move down through here is in 5 waves, and currently that move up through here is in 3 waves, so that could be viewed as an A and a B and a C. So if that is the case, then this will drop through here, and if 96 becomes the retested resistance, then you look to short from there, adding under the 95.72 as well for the short trade at that point there. But while it's sitting above 96.30, we need to treat this as the 4th wave and looking for a 5th wave higher here. Technically it should go a little bit higher into group 1 of 97 here, but I'd certainly just trade to the, take some at 65, the rest at 72. If 72 becomes the support, then build back in on the 72, add on top of the 80, and get to 96, 97 there. I meant 96, 97, not this 97, but because it didn't quite make it here as well. So always good to get out at 7 or 8 before any whole number, because the orders will start flowing in, sell orders there. Alrighty, well that's it. So just a bit of a recap there. the euro is not showing signs of a short trade setup, and the Australian dollar is not in a position for that just yet either. Perhaps up in this area from 97 to 97.30, it would be showing weakness at that point. The indices have started their wave 3 to the downside, so depending on what degree of trend that you're trading, we should be seeing further downside. Alrighty, thank you and thanks for listening.